Today I'm going to show you how trading small contracts can be your pathway to big profits. That's coming up right now. Today's featured trade is the 8th of June 2022. A bear market for the last 6 months, the highest inflation in 40 years, a European invasion, and a 100-year pandemic. Always prudent to take a look at what the talking heads on the financial channels call the overnight action. Not a lot of action up or down overnight here. The highlighted yellow is midnight up until opening at 9:30. Now, if you're new to the channel, you may not know this yet, but right before I do a featured trade of the week, I go to a still screen before I go to the live screen. The reason is simple, actually. I'm going to answer that question. Why this trade and why now? On most days when the market opens at 9:30, it's kind of a coin toss whether it's going to go up or down. And it has a history of being almost every day very, very volatile in the first few minutes of trading. I very, very rarely will trade right at the opening, and I don't recommend it for beginners. Volatile and fast markets are even hard for seasoned traders. So on June the 8th, when the market opened at 9:30, it went up 26 points, 41.33 to 41.59. So in the first 30 minutes, that's a price swing of $130. If you're trading with a small account and get on the wrong side of that, it can be just too expensive. Sometimes these rapid price moves are like a ball thrown up into the air that loses its momentum and starts back down again. By 10:08, after 10 minutes of downtime after that peak, I decided there was a good probability prices would continue going down. So I decided that if I run a close stop, I could risk a few dollars to try and take this ride down in price. I just showed you an example of velocity, acceleration, and the loss of momentum, something you already knew every bit about. We waited, we used our patience, we found an opportunity, we developed a strategy. Only one thing left to do. This isn't rocket science. Now we enter the order. The best way to define the risk on a trade is to enter a bracket order. This is the part of this type trading that I find the most amazing. Remember, our strategy here is not to try and guess the market, but we already have a downtrend. Our total strategy here depends on participating in that downtrend. I don't have to put a large stop order on this trade. Either the market's going to continue to go down or it's going to reverse and I'm out with a small loss. Now watch this. If I was a trader with a page full of rules that I should follow, I would be giving up all my flexibility and creativity in trading. Here, we have a situation where the market's either going to go down and keep going down right away, or it isn't, so it only requires a small stop order. Now I figure my odds here are much better than a coin toss, but I'm not willing to bet $50 on it. So I came up with a stop at $41.55, $13.75. I just spent the last 2 minutes explaining my rationale for this trade, so I don't feel I need to explain why I'm completely ignoring the MACD down there. MACD never paid any of my losses. Okay, let's zoom in and get a better look at this trade. It's a shame, but beginners, I feel so bad for beginners learning to trade because the first few trades you have no confidence. You don't have any experience to base it on yet. That's a difficult position. It's kind of a hump you just have to work yourself through, I think. We all go through it, so hang in. You'll make it. So far, so good. First 30 seconds of the trade, we're up just over $20. Okay, rule number 1, always, constantly strive to reduce your risk during a trade. That's why I have out my Tastyworks mouse. With that left mouse button, I'm clicking and dragging and pulling that stop down to 4150.25. Now, when I do a trade, I always feel like I have a say in what happens. It's not all up to the market. I'm running a stop now within 1.5 points of where the market's trading. And if the market doesn't go down, I'll get out. I won't lose any money at all. Some traders have an attitude that once they place a trade, they become a spectator and they have no control. But you got to remember, you're the one driving the bus. Up until May of 2019, when these new micro contracts came around, you had to pay $50 a point to trade the S&P E-mini, the regular E-mini. This one is 1/10 the size, so it's only $5 a point. Right now in this trade, I know that my stop is precariously close to the trading price. I get within 0.5 point just then of being stopped out, like I'm playing a game of chicken here. But I am gonna take my Tastyworks mouse and back up just a little bit so I don't get stopped out of this trade just trying to save $3 or $4. You have no way to know what I'm thinking here unless I speak it out loud. So I'll tell you, I'm thinking I retreated $5 then, but that's it. I am not going. I'd rather get stopped out than lose a penny in this trade. You may not know how much you're going to make, but you got to choose how much you lose. So I got my Tastyworks mouse. I've got a little room now, and I moved my stop again. This time I got it down to 41.49 3/4. Let me ask you a rhetorical, hypothetical question. How many decisions do you think I've made since the moment I turned the screen on today and got myself from there about 10 or 15 minutes ago to now? Scores and scores of micro decisions, sequential decisions. Now, the question is, what do you think the odds are that 10 different traders would make exactly the same decisions at the same time? Well, the answer is, it ain't going to happen. Of course, the point I'm trying to make is that we're all different. Each of us is unique, just like everybody else. Meanwhile, back at the trade, we've got $27.50 locked in. This thing's going crazy down. Locked in $42.50 now. We're trading at $139.50. My Tastyworks mouse is going to get paid some overtime today. This thing is going crazy. We're trading $41.38.50 right now. And I've got $53.75 locked in. And it's still going down. Look over the right margin. We're trading 41.36 there for just a moment. Back up to 41.39 now. I've got $60 locked into the trade. And remember, the most I risked at the beginning was $13.75. This is going to be interesting. Watch what happens next. I put that 41.35 target down there arbitrarily. I figured it would never get to it. That was an outstanding trade. How much fun was that? I moved that stop, 7 or 8 times down there. Wound up making $86.25 in 7 minutes. No drawdown. Maximum risk under $15. It's a crazy good trade, and it was a lot of fun. It's exhilarating when things go right. By the way, I want to show you something that's pretty remarkable. I sold right here, 10.08. So I was short. I covered down here. Look at that green line, 41.35, right at the very bottom. It was sure good luck, an accident. Then 7 minutes later, the market had gone back up 15 points to 41.50. You know, I work pretty hard at some of these trades, and I have a lot of fun doing it. But I think there's something to the old adage, the harder you work, the luckier you get. This is proof, I guess. But it was spectacular, and I'm glad you were along for the ride today. If you want to see another video that's similar to this one, I count the likes, so hit the like button, and that helps me determine which topics to make the future videos on. Speaking of that, be sure and subscribe and hit the bell, because that's the notification bell. You'll get a text or an email each week when I put up the new Trade of the Week videos. I'd appreciate that. And don't forget to look down in the text below the video for information on Tastyworks. You might like it. And also, my book link is down there, and you can look at the table of contents and things like that. I'm Don Singletary. Thanks for being along today. It was a really great time. And I hope every day is a payday for you.